people invest with people. People do not invest with just a project itself, right? And so they're going to invest with me first, know that I'm doing something or know that you're doing something right. And then eventually with your track record, they'll say, hey, I'm ready for the next project that you're in.
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth, one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
Welcome to another episode of Spur Equity's Spur Your Wealth podcast. We are your hosts, Param Singh
and Rav Singh.
On today's episode, we're going to do something a little bit different. We thought it would be good to jump into our backgrounds and journey in depth. So today we're in for a treat. I'm going to interview my partner, Rav, and he's going to share a bit of detail about his story. Some of you may already know bits and pieces, but we thought it would be good to dive a little deeper and really get to know what drives him and what led him to where he is today. Let's start right from the beginning. So I know a little bit about your background, right? Of course. But I think our listeners would love to hear the story of, how you made the transition from your previous career and to pursue real estate. So let's start with that.
Sure. Amazing. Thank you. So thanks for having me on today, Param. I know, I'm going to act as your guest, even though I'm your partner at Spur Equity. So how I got started, I believe that everything happens in disguise, meaning that, there's stuff that's meant to be, right? I wasn't looking for real estate. I wasn't looking to get into real estate. I wasn't looking to broker and, get into the brokerage business. But what happened was, I just had a little health issue, had a bad back. Something happened to me about 20 years ago. And so that led me to start thinking that I can't be in front of a computer all the time, right? So my brain started working in that direction. So I started looking at just different avenues of pursuing professional goals, feeding my family, just, all that was happening in the back of my mind. And then what happened was, during that time period, if you remember, almost 18, 20 years ago, there's a lot of shows that were happening on TV, flip this house, flip that house, and they were making it super easy where anybody could flip this house and make hundreds and thousands of dollars. So, yeah, I looked at it as that, and this is probably something that I thought about at like 2 a.m. one night and said, hey, that's something that I can do. And so I wanted to invest and I wanted to flip houses. My vision of real estate was houses and flipping. And so joined some of these local organizations, learned the formulas. Some of these guests came in and talked to me regarding what the after repair values were and all that. So anyway, that's what led me to real estate. This happened about 20 years ago. I put offers on 3 different properties, 4 different properties. Could not get anything just because Californians were coming in, paying all cash. But one thing that happened to me was that I believe in foundation, right? I believe in education, and I think that's the immigrant mentality that was ingrained by my parents. That's ingrained by just our upbringing. That you have to study, you have to educate yourself. So I had gone to the real estate school. And basically, I got my license, my real estate license, because I wanted to learn the foundations of real estate. Not doing any deal where Californians were beating me. Now I thought, oh, hey, I have a license. Maybe I could look into the brokerage business. And that led me to thinking on the brokerage side.
So remind us, just because people don't know where you came from in the back, remind us what your previous career was and how different that was from real estate.
Sure, absolutely. I'm a graphic designer by education, right? I'm a creative thinker. I was a brand manager. I was a creative director for almost 15 years. I had my small design studio, uh, started back in Des Moines, Iowa, and then I moved here, migrated with my family, or not migrated, but moved with my family, in San Antonio, and still in the design business. Now thinking real estate. So, I mean, that's a pretty big paradigm shift, right, in terms of what's happening in my mind at that point. But ultimately, what led me to this field was that at the end of the day, as a creative thinker, being in the design field, there's a problem, and you're solving a problem, right? Whatever that is, either it's a branding problem or a marketing problem. Well, guess what? In real estate, it's exactly the same thing. There's an issue, and the issue or a problem could be is that a seller wants to sell and a buyer wants to buy. So my marketing background
How do you make
helped,
that
right?
happen?
Because I
Yeah.
knew I knew what to do, how to creatively solve some of these problems. And so that's what I've been doing for the last 20 years.
That's great. So you started. I mean, it sounds like you started with kind of a personal approach to it. That hey, I want to flip houses. Maybe I get my license and I save on commission. Maybe I help people find homes for themselves. Tell us how you transitioned between that and then your commercial brokerage, because that was a really big change, even from within real estate.
Absolutely. So for me, as I kind of mentioned earlier, is that for me, my vision of real estate was houses, was homes, right? And so I wanted to flip homes, and so that's what I was doing. Was not successful at all. Could not get one property in contract, but I had my license, and through community in San Antonio, basically the second week I had my license, I get this call from one of our members of the community in San Antonio who owned a gas station. And he calls me and said, "Hey, brother, I heard that you are a real estate agent. Can you sell my gas station?" Right? And so I've been taught that you never say no to anything. Okay. And so he called me and said, "Hey, can you sell a gas station, or do you sell gas stations?" And my answer automatically is, "Of course I sell gas stations." Right. And but what that does is that triggers a little sort of different thought in your mind, because now you have to go study about something that you don't know. Right. That's the problem now you have within yourself. And so that's what I did. I basically met him over the weekend, talk to him, and of course, you got to come from contribution. You got to come from, just, you can't lie to anybody. Opened up to him and said, "Look, second week in my business, I have a real estate license. I've never sold a gas station. Heck, I've never sold any real estate, but I also know that pretty strong, pretty smart. I can figure things out. Give me an opportunity, and I'll sell this thing for you, right?"
Yeah. Yeah.
And I mean, he knew me through a friend of mine, and he said, "Okay, I'm ready to sign. Where do I sign?" And my answer was, "I don't know. I have no idea. I don't know any paperwork, but I'll learn, and I'll sell this for you." And so, yeah, that was second week in my business where I got this opportunity, and that sort of led everything on the commercial side for me. It was just by accident.
That's great. That's such a great story. So, and I know a little bit about the background, right? So, like, you've been brokering now hotels and commercial properties and gas stations, all this stuff for your clients, right? And so, during that time, over the last 15 plus years, obviously, you've been successful with your own clients and purchasing these properties. What projects did you pursue personally? In investments during that time as well. Tell me how that went along, with your brokerage
Right.
business, because I know that you ventured into some of that yourself, and just tell us a little bit about that.
Yeah. Right. So I was now known as the gas station broker, right? I sold a lot of gas stations. I've probably done, double digit sales in my career in regards to just selling gas stations. I knew the vertical, I knew the numbers, I knew the business behind it. And so one day I was looking at a gas station to purchase for a client of mine, and this client was going to come out of California. This is back in 2008, 2009 timeframe, when the market had gone down, right? I entered the market 2, 3 years later, and there was a dip in the market. And that was a big recession that we had in the country. And so the guy who was coming out of California who's going to buy this gas station was not able to sell his location in California. And so basically he was under contract and he canceled the contract. But it was such a good deal, right? It was a good deal. I thought it was a good deal based on the knowledge that I had, where basically at that point, I knew somebody who was also in another business, yet they were also creative solvers, thinkers, and they wanted to have an opportunity. Basically, I went to that person and I said, look, why don't we partner up and buy this thing ourselves? I mean, at the end of the day, what do we have to lose, right? We have employees that are there. Everything's dandy. Everything's good. So I dabbled into the gas station business myself. We purchased a gas station, and we held that gas station for 10 years. You know, everything has its ups and downs, right? And so at
Sure.
the end of the day, the buck stops at you. But yeah, that was my entry into the investing world. Got a gas station. We had some single family rentals. That was my sort of dual lives where I was a broker, yet I was an investor, and I was looking at both opportunities. You have to approach this business with possibilities, with opportunities, right? Yes,
Yeah.
my fiduciary responsibility is towards my investors and my clients, but ultimately my responsibility is towards a deal and towards me and my family also.
Sure. No,
So that's
absolutely.
yeah, that's what we did. Yep.
So, and I know that that kind of had its own challenges, right? Operating, kind of a business like that. But what led to you reevaluating your personal investment strategy and pivot towards, I know that you pivoted towards multifamily projects because we did that together. But then ultimately then syndicating larger projects. So can you explain kind of that thought process of pivoting away from, some of the gas stations and hotels that you were brokering for your clients and then looking at your own personal investment strategy?
Yeah, yeah. So, Param, I now I've been doing this brokerage business before I started my own venture with you on Spur Equity for at least about 12, 13 years. And time and again, I saw people who would buy these businesses and they would think everything is just hunky dory and it's easy. And a year later, 2 years later, 3 years later, they would get burned out. It would be really hard for them just because they're spending 12 hours, 15
Time.
hours, just
Time. Yeah.
time working. They were trading time, right? I mean, for money, and they had no time for the family. They had no time for their kids, and I could see that. I could see that in their eyes. And to a point, I saw that a little bit when I was doing the work. And even though we were passive, but basically, I this word passive kept on I kept on thinking about this word over and over and over again. And so that's where I think when you and I, we've been friends for now years, right? And we've had conversations for years regarding, hey, looking into investing and doing something like that. So I was just fortunate enough that, we had the courage and we had the foresight to look at saying, look, let's look into multifamily investing where we're going to go buy these small multifamily projects, but let's buy it ourselves together as partners, not syndicating. We didn't know any of these fancy words, but just
Yeah.
buying these projects and making sure that we have some good tenants and good leases, and that's all we had to do at that point, right? But things, I mean, but things weren't really clear in our head at that point because we thought you just buy it once and you just let it go, and
Right.
things would just happen by itself, right? But as you know, we had our own challenges dealing with our first 16 unit property that we bought, and so, but that's what my thought process was. I wanted to transition from looking at a sort of very active job, very active investing into
Yeah.
something that was more passive. That was the journey. That's where it started.
And that's exactly right. I mean, I think, just if I could add to that, like,
Yeah.
we know very, very clearly that we wanted to do a passive kind of investment. And so it led us to even on my side, right? Like, short-term rentals and other stuff and like, looking at gas stations, et cetera. That's very, very active. It's an investment, but it's very active, right? Because your day-to-day operations, you're running it. Then we moved to multifamily, We bought it ourselves. We managed it ourselves. Wasn't necessarily day to day, but yes, it was still very active. It still took a lot of our time. And so, but it was less active than, say, running a gas station. So
Right.
I think, that is important to recognize that even us or other people that are, have this ultimate vision of passive investing, that it doesn't happen overnight. It can't happen overnight. There are some things that you have to do to get to a place where you have multiple streams of passive income, and it took several years for us to get to that point, where we even learned about syndication and what sort of benefits that does. Good transition. So why don't you explain to our listeners, for those that don't necessarily know what syndication is, and the power and benefit of that. Explain a little bit about the concept of real estate syndication, and then what key benefits for investors and sponsors, from a syndication standpoint.
Sure. So I'll do that in a second. But I also wanted to kind of let you know, and the audience know, that while you and I were investing in some of these properties, right? So we started with one and we sold that property, made good money, correct? I mean, it was
Great
an
money,
aha
yeah.
moment for us. Right, we made great money. So it was an aha moment for us. It was a light bulb that sort of said, "Hey, how come we haven't done this before?" Because what we did is we took that money and we rolled and 1031 into another big property, right? And so where we had now zero equity out of our pocket, just the initial money that we had put in, but now we got into a bigger property. But really, what we saw together was that our friends and family saw that success, and they started calling us. They started basically saying, "How do we partner with you? How do we invest with you?" So now, once again, if there's a problem, within the problem itself, you find a solution, right? And so for our problem, it was just, it was a success. It was a growth that was happening, but that was a problem in the sense that now we had to figure out, how do we get involved? How do we get our friends and family involved into investing? Partnering with people all the time, just like you and I partnered, could be a burden, right? It's very hard to partner with people a lot of times. And so we together had to figure out a system on how do we have our friends and family invest with us. And I think that's really led to us thinking about, how do we passively have our investors bring capital to the table. And so when we think of the word syndication, that's really what it is. It's a loosey-goosey word for being a partner with somebody. So it's pooling capital together. It's pooling other people's money together, so then you can buy larger, bigger, and better properties. So that's what we did. A syndication is a fancy word, but at the end of the day, it is that partnership where some of the folks that are non-sophisticated, but they may have capital, sophisticated from a financial angle, from a real estate angle, they could still get involved in real estate, and they could still get involved in larger deals, which they may not get involved on their own. But now they have an avenue to become an investor, to become somebody who's very passive in real estate, yet still earn income, still earn distributions. So luckily, we found a way for us to do that. And in 2019, I think we started learning about the benefits of syndication, and we did our first syndication as our company, Spur Equity, is born in 2019.
Yeah. Yeah, I mean, I think the power, you explained it really well. The power of syndication is that, you may have the same amount of capital, rather than going, let's say, we're $50,000, we have disposable income or investing income $50,000. I can go buy, a $200,000 house and then run it as a rental, but I have to do everything, right? I have to do find the lease, do the background checks, do all of the evictions, do all of the sort of management of the property. Whereas syndication, you find somebody like us or another partner that is buying larger properties, and you're still putting in that $50,000. But then guess what? They're doing all the work. You're not doing anything. You're just putting in your money, and you're earning a return on that money based on the business plan. So it still takes time and effort to find the deals and find sponsors and vet them and make sure that you're going into something that's pretty solid. But I would say it's less time and effort than if you're doing it by yourself, right? So that's the benefit. And then
Well,
the
and now,
economies of scale and all of those other things, right?
right, right, and you said it. I mean, nowadays, my the way I talk to investors, the way I talk to even on my brokerage side, I talk to agents have changed. Ultimately, at the end of the day, and you just said it, you have to look at it based on a return, right? Putting $50,000 and getting a return versus putting $50,000 and buying a property, right? Are ultimately you're investing in both ways, but one way is very passive and one way is very active. And active could have its own challenges, but there's some people who still like the power of touch and feel and want to make sure that they're gaining something. It's a hard work that they're doing, and that's totally fine. We're not saying that that's a wrong approach. That is definitely an approach that people look at, and now they're looking at future appreciation. Or they can look at syndicating with general partners, GPs as general partners like us, versus just becoming a limited partner, which their equity is the only thing that they're putting in, and then they're 100% passive after that. Yeah.
Yeah, I mean, I think you and I both have friends that have built a really great, let's say single family portfolio, and they understand the time and effort that goes into it, and they're comfortable with the time and effort that they're spending on it. So again, we're not discouraging anybody from doing that, but if you were like me, right? I was working full time, 40, 50, 60 hours full time on a W-2 on an IT job. I didn't have the time to go and say, okay, I want to, buy a couple of houses and run it, and as an Airbnb, or otherwise, right? It's more time away from what the things that I want to do to be able to do that. Again, you can do that, but eyes wide open, right? Going in that it's going to take time for you to manage that. So when I found the whole syndication route, where we could, invest our money, passively and just sit back and get a return and invest in something that's solid, that was life changing, for us as well. So,
Yeah.
So, let's a little bit about syndication. We've obviously syndicated, multifamily properties and some others. So, in your experience, what types of real estate projects are best suited for syndication, and are there specific asset classes or strategies that tend to perform well in that syndication model?
So, typically we see people syndicating pretty much any type of real estate, right? What we've done in our in our backyard is basically we've invested in multifamily properties. These are apartments. People have done it as small as whatever, 3, 4, 5 units, and or they've bought portfolios, 100, 200, 300 units. So regardless of, I think, what works, what doesn't work, at the end of the day, we encourage that people just need to start looking at that process. Now, at the end of the day, business plan matters the most, in my opinion, right? And that means that depending upon whichever asset class that you're purchasing, either hospitality or multifamily or industrial, you have to look at a business plan. Majority of the ones that we see, people who are syndicating, they are looking at a value add strategy, right? They're looking at a property that is somehow something is going on that property. Maybe that property is not generating enough revenue, or because the way it's being operating, the management is an issue, or maybe it's not upgraded. There's something that's going on where the market is here and they're achieving less than that. And so a value add strategy is by purchasing that property, putting correct management in place, putting correct renovation plan in place, and putting enough marketing in place where you take the property from generating from here to generating here. And that's the business plan. That's the value add strategy. It could happen in hotels. It could happen in multifamily. It could happen in, any type of asset classes. As long as you see an opportunity for you to add value in that class, in that real estate asset class, then basically that's something that you want to underwrite it better to see how the market is in today's time, based on the sub-market that you're in. How is this property comparing to the rest of the properties around it? And if it makes sense, then you basically move forward.
That's great. So let's take a step back a little bit. So as we all know, real estate markets can be very cyclical, and you mentioned earlier that you jumped into real estate, a couple of years before some of the worst times, right, in real estate with the 2007 2008. So you've seen your share of ups and downs, right, in the last whatever 20 years, 15, 17, 18 years, whatever.
Right.
So also as it relates to the current economic situation, right, with interest rates going crazy and lender market these days and its challenges. So how have you advised your clients in the past, right, when you're talking about brokerage and hotels and retail? How do you advise your clients to sort of navigate these cycles, and then how do you navigate market fluctuations and economic downturns to ensure kind of long-term success even in your investment projects?
Yeah, excellent question, right? Because we're getting this question now every single day, right? Based on what's happening in the market. We're in 2023, and we're seeing a lot of challenges that are happening in the last basically 6 to 9 months. Our capital markets, if you look at interest rates, have, gosh, they've gone from 3.5% that we secured. Now they're typically 7 to 10, 11%. It's crazy what has happened, right? And so what happens is when investors look at that, and when anybody else looks at that, it freaks them out. Ultimately, they're calling and they're worrying and they're saying what's happening. And so my job, Param, is to basically tell them to stay grounded. My job is for them to say, look, you have to look at real estate as a long-term play. It is not a short-term play. Now, yeah, if you can sell a property in a year and double your equity, great. You killed it. But that's not something that's going to happen every single day. And so historically, if you go back 50 years and you look at the data, if you look at a bar graph, or if you look at just the information itself, you will see that what we're seeing today, it's not something that we haven't seen before, right? And it's something that we've seen before. Matter of fact, we've seen even before, even worse than this. And everything survives. People survive. Markets survive. And so for me, I just tell people, look, at this point, you have to see where you are within your unique situation and act accordingly. Lots of our guys that we talk to, they want to have their money in their savings account so they can see their money every single day, right? Great. That's I guess a strategy that people have, right? Or we tell people, look, you can still invest that money into a solid, into a project where the person itself, right? Because at the end of the day, what you and I talk about in our world is on the syndication side is that people invest with people. People do not invest with just a project itself, right? And so they're going to invest with me first, know that I'm doing something or know that you're doing something right. And then eventually, with your track record, they'll say, hey, I'm ready for the next project that you're in. We see this every single day. People are saying, where do I wire the money? And we got to put the brakes on and say, hold on. Let's talk about the market. Let's talk about the project itself. Let's talk about the business plan. And so this is a market that's going up and down quite a bit. But if you take a long-term approach, this correction had to happen, right? This correction had to happen. We're all hearing in the news about soft landing, what's going to happen. We still don't know, right? I mean, there's another hurdle that's coming, which is basically that presidential elections are about to happen, right? And so there's going to be a lot of ups and downs that may happen, but ultimately, I think we're at the tail end in terms of what's happening in the economy, in terms of interest rates. I mean, they've gone up. SBA, somebody quoted me 10.5% yesterday, and an investor who was buying a hotel at 5% a year ago has to pay 10.5% today, right? And so what does is that decreases value. And so as the interest rates they go up, guess what happens? The value kind of starts going down because the cap rates start going up also. And so but it was something that we were kind of waiting for. We knew it was going to happen. We just didn't know when it was going to happen. So my advice to people, Param, all the time is that let's look at a holistic view. Let's take a look at a long-term approach, right? And people make money in a down cycle, not in an up cycle a lot of times. Look at you. You always tell me when you used to invest in stock market that you've made a lot of your money when the stocks went down, not when the stocks went up, right? And so maybe perhaps this is a opportunity for somebody to look at deals and go ahead and buy some of these properties. And so there's always an opportunity. At the end of the day, there's always an opportunity. You have to look at it and you have to approach it that way.
Yeah, and I love that. I think there's always an opportunity, right? Like, and you have to filter through because there's less transactions going on. There's less stuff that's out on the market, so it's less stuff to sift through. Also, but there's always opportunity, and that's what I see. And yeah, the challenges that are there, like, okay, we have interest rates going up. Looking at fixed rate debts, right? And so you have predictability. You're looking at, operationally on the multifamily side, challenges. That's why one of the reasons that we sidestepped to industrial, which is very, very predictable. Again, right? So you're looking at. There's always opportunity. I think what was the quote? When people are greedy, be fearful. When people are fearful, be greedy. Right? And so I think that's the time. Everybody. There's a lot of people kind of staying off to the side and kind of waiting it out. And the advice that I would give is don't wait it out. Don't just sit there, and I mean, always look for opportunity because there are hidden opportunities. You just got to apply yourself and kind of find it. And even in markets like this, because somebody else told me he's like the most self-made millionaires that have ever happened in 2008, 2009, right? When everything was just doom and gloom. That's when somebody, these people took and seized that opportunity, and they saw, tremendous growth. So I think that's a lesson for today as well.
Yeah, I have investors who are doubling down in this market right now. They're looking at this market and saying, "Look, I actually purposely didn't buy anything in the last 4 or 5 years because that was the peak, right? Interest rates were really low, but the cap rates they were purchasing was at 3.5%, 4% cap rate. Same properties today, the values have gone down, caps have gone up, and these guys are doubling down. And so what they're doing is they're creating funds, they're creating partnerships, they're syndicating, they're doing all that on their own side just to purchase these properties. And because that's the time of the need at this point. And I love what you said regarding you have to hedge, you have to look at the risk, and you have to see what needs to happen in order for you to diversify in this market.
Structure the deal properly, right?
A lot of people are doing that. Correct.
Yeah, no, that's exactly right. I mean, I think, and 2-3 years ago, like when we started, I mean, everybody was making money, right? Everybody was making money because, debt was cheap, values were going up, rents were going up. Everything was just, people who didn't even know how to operate were making money. And so now we're looking at, hey, operations and the effectiveness of operations and really structuring the deal properly, the relationships that you have with lenders, the relationships that you have with insurance providers, all of that becomes super, super important because now you're trying to squeeze and maximize the return on every deal. Whereas, 2-3 years ago, no one cared because they're like, oh, we'll make money, right?
Correct.
So now the actual skill of an operator, the skill of a sponsor is actually under scrutiny because, it takes a very, very unique individual and unique partnerships that are going to hedge against the risks that they foresee and still, come out whole on the other end. So that's what we've seen. So that's really important. Yeah. You obviously work with a lot of people in your brokerage network that have invested actively, right, in hotels and retail centers and gas stations, and they run those gas stations. They go from 1 to 2 to 3 to 5, whatever, right, within their family. What advice do you give them, if they're looking to expand on their, investment portfolio, right? They come to you and say, "Hey, find me another hotel, find me another gas station." What kind of advice? How is your advice different today than it was, let's say, 5 years ago?
So for me, Param, as we began this talk, I said that believe in foundations, believe in education, right? Ultimately, you have to learn the trade that you're in. And so my advice to and look, go back to my brokerage business. I'm with a big brokerage company, national franchise. I know a lot of agents that I work with, and a lot of these agents, they invest with us in Spur Equity in our company. And so my advice to them is that while they have a fiduciary responsibility to finding deals for their clients and their investors and their buyers and their sellers, but they also have a fiduciary responsibility towards their families, towards their growth, towards their generational wealth, towards their kids. And so we have to look at from a lens of just being an investor ourselves. And so that's what my ultimate advice is to my peers, to the agents that I work with, that learn how to invest in you, learn how to invest in projects for your families, be a passive investor while still doing your job, which is be a fiduciary and do a really good job of finding deals for your investors or for your buyers and sellers. And so, luckily enough, we have a lot of different agents who are limited partners in our deals. And then, we also talk about that in today's world, you have to learn, you have to network, you have to read books, you have to talk to people who are at their top of their trade, what they're doing, and learn from them and seeing what they're doing. And then ultimately, I tell people, if you want to be an investor, if you want to syndicate deals, because we get these questions all the time, be a limited partner. Start with being a limited partner. Start by being a passive investor, because what you do is you learn from that. You invest in somebody else's deal. Now you have to learn how to underwrite. You have to learn what you're looking at numbers wise, because you're putting your money at risk. That's one of the best ways to actually learn, because it will motivate you to ask the right questions. And so ultimately, that's what our investors are doing with us, is that they're investing with us, but we get these calls. We're on Zoom calls all the time. We're on email, on text messages all the time. And generally, people are learning how to be an investor. And for me, what I have learned this year and what I've learned last year, and I think between you and I, from our company standpoint, our perspective has changed a little bit also, where ultimately we want to be a lifestyle investor. We want to actively work on our lifestyle, and lifestyles, my thinking might be a little different maybe than your thinking in terms of what you want from life, right? Because everybody has their own personal thinking. But at the end of the day, I don't want to work 60 hours a week, right? I want my money to work for me from an investing standpoint. And so being a lifestyle investor, I could focus on my family, on my community, on my time, on my, whatever my passions are that I want to pursue, yet I'm having my money grow by itself. And that's what led us to looking at being basically a fund manager at Spur Equity, where now as a fund manager, what we're doing is we're having big sponsors pitch deals to us all the time, saying that, hey, look, we are working on this project. We have a team behind it. We need capital, right? And that's where Spur Equity comes into play, where as a fund manager, we're looking at diversifying and bringing different projects, different asset classes to our investors, if it passes our lens, if it passes our way of underwriting. And if we like it, we are ready to put our money in it, then we'll take it to our investors. But it all begins with education, because I feel like that you could educate all you want, you could read books all you want, you could do any of that, but until you apply that knowledge, it's of no use at the end of the day, right? So knowledge is power. We say this all the time, but action is superpower. Without that superpower, you're not able to take that leap of faith, and you're not able to do anything. So apply the knowledge, learn, read books, talk to people, network, go to meetings, do whatever you need to do to gain that knowledge, but then apply that knowledge. And that's the way to be a passive investor for you, be a really good fiduciary for your investors, and then also build generational wealth for your families.
That's great. I love that concept of the lifestyle. And, obviously you and I have had this conversation many times, that even us, like as we're, we created this company and we're, actively pursuing these deals and really putting this stuff together for our investors. But ultimately, all I want to be is a passive investor ultimately, right? Because we want to have that time back for our families and for our own, personal pursuits and things like that. So yeah, from a work standpoint, investing as a lifestyle investor is really, attractive, right? Because it, like you said, it gets your money to work for you, and you're simply out there. You get to make a difference in your community. You get to, do what you want to do, and then you have more capital to be able to do that, right? Because all of these investments are generating that. So I love that concept, and I think, if everyone thinks about that in that lens, and even if we're talking about like, some of your clients that own like gas stations, for example, I know in my own family, for example, we have older generation that put in really, really hard work and built like this portfolio of gas stations, and they're, kids are gone to college and they're coming back, and they're like, the expectation was, oh, they'll manage all of these gas stations as a business, and the kids don't want to do that, nor do they, feel like that's something that they want to pursue. And so now you're stuck with, not stuck, but you have, this portfolio that you kept growing, right, actively and working really hard. But we've seen a lot of your clients, for example, and our family that are pivoting away from now actively pursuing, growing their hotel portfolio or their gas station portfolio, and saying, hey, I want to sell all of these off, and then I want to put all of that capital into something very passive that my children are going to manage, or my estate is going to manage. And so it's going to be growing without me having to be there, right? Or our family having to be there and actually running these operations. So that's a huge shift in our own community, where we've seen that these recent years, that there's a huge shift and sell off of active assets and going into more of a passive framework. So that's 100%. really interesting.
Yeah, these are conversations I'm having every single day, Param. With not just my investors, just with our families. We're talking to our kids like
Our
that.
friends,
Right? We're telling them, look,
Yeah.
this power of leverage. This is actual leverage, right? This is what we talk about every single day. And so we want to leverage each other's strength. We want to leverage each other. And so yeah, for us, passive investing is amazing. I want to be 100% passive investor. I'd rather money make me money, right? So I could use that. It's a tool. I can use that to fund my life, to do whatever I need to do, even if I want to give and support charities, or if I want to, whatever I want to do with it, right? It's a tool for me to do that, but I don't want to be working 60 hours a day so I could do that, right? I want to be a passive investor, make maybe a little less than what somebody else is making, but doing all the work, and I'm 100% okay with that, as long as I know that I'm getting my return, and that's what I'm after.
Right.
Yeah.
Well, good, man. This has been great. I think we'll wrap it up here, but I want to say thanks, Rav, to you for sharing your story. Even I learned a few more things that I didn't know, and I'm sure our listeners got a lot out of that. So thank you so much. It's really great to see, and it's evident, right, in how you're talking, like the passion that you have for this stuff, and how much it's transformed your own life, and how these journey is about educating others to be able to transform their own lives. So thank you for that.
Absolutely. Love doing it.
Well, everyone, thank you for tuning in to this episode of Spur Equity's Spur Your Wealth podcast. Again, we are Param Singh and Rav Singh from Spur Equity. And remember, as always, your journey to financial freedom begins with knowledge and action, where knowledge is power,
but action is superpower. So until next time, happy investing. Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at spurequity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@spurequity.com. Until next time, happy investing.